So, without too much further ado, I'd like to welcome our first guest speaker, Andrew Sorensen. Andrew is the Chief Executive Officer of WA Kaolin. And for those of you that don't know much about kaolin, you find it pretty much in everything in your daily lives. It's in paint, it's in ceramics, it's in fiberglass. It's one of those minerals that's in high demand, but you probably don't know much about it. And so, of course, somebody has to dig it up, somebody has to sell it, and somebody has to make money from it. And tonight I'm delighted to say that WA Kaolin are going to tell you a little bit about it. So, Andrew has more than 3 decades experience in operations management. He joined WA Kaolin back in 2006. We all remember that year, of course, with the GFC. And he's overseen several of the company's key development milestones. He's been fundamental in driving and implementing WA Kaolin's vision and strategy, and he guides the continuous improvement of the Wickerpin Kaolin project. Ladies and gentlemen, can I ask you please, in the usual way, to welcome Andrew Sorensen to the podium. Thank you.
Okay, yes, thank you very much for that introduction, and I really appreciate everything you said. Some of it's true in terms of my experience and skills. I'm here to present all about WA Kaolin. We're a company that's producing kaolin and selling the kaolin as we speak. So an emerging producer for us means that we're ramping up to our full potential production and through a ramp up of sales as we speak. Here's the disclaimer for you. I'll take that as read from everyone. Here's a picture of me standing in front of some kaolin. The marketing people love this picture. I hate it, but anyway, they make me put it in. Kaolin, as you can see, that's as we dig it out of the ground. It's a very white clay material. We've got very low cost production. We've got very high quality materials in the ground, and we're currently ramping up, as I mentioned. Here's where we are in the ramp up. So we had pilot operations. We've got a plant in Kwinana, which is just down by the port south of Perth. We've been running that plant since about 2017, growing the market, sending samples out to all of our customers. We then started ramping up the stage 1. So we raised some money in 2019 through an IPO, and we spent $18 million to build a plant out at Wickerpin, which is adjacent to where our mine resources are. Now, being able to do this means that we can produce at 25 tonnes an hour. That's our nameplate capacity. That equates to 200,000 tonnes a year. Average selling price of just under $300 a tonne. You can do the math on what the revenue is. We then plan to continue the ramp up through basically doubling the production, which is essentially a cookie cutter of our existing plant that's underway, and that'll take us up to 400,000 tonnes of capacity. And then we can continue to bolt on additional modules to increase our sales beyond that 400,000. And we have an internal target to hit 1 million tonnes a year within 10 years. So that's a very compelling business growth story, and we've got the resources in the ground to support it. We've got 650 million tonnes of kaolin in the ground, and if we are producing 1 million tonnes a year, we're actually going to be pulling out about 3 million tonnes of clay out of the ground a year. So with 600 million tonnes in the ground, you can see it's a very long-term mining proposition. So we're going to be generating cash for generations to come. We've got the plant operational. As I said, we've made sales. This truck here was one of the first container sales that went out of the plant last year. And as you can see, we packed the material into half-tonne bags, put 40 of them in a container. That's 24 tonnes in a container. The container gets lifted onto the back of the truck and taken straight to the port. We're getting a price premium over what our DFS was stated. We had a price assumption of 240 a tonne. I can tell you, year to date, our price is around 270 a tonne. So we're doing very, very well on our revenue projection. And we also have an upcoming asset that's coming on stream, which is a bagging line. Kaolin that we sell in the large bags, the price premium when we sell it in 20 kg bags is much higher. Here's a little bit about the company. Our directors and the capital on issue, market cap around $50 million. Here's the project, map of the project. We're about 2.5 hours drive from Perth, and we're equally distant between the ports of Perth and Bunbury, so we have plenty of shipping options. We've got lots of local infrastructure, we've got towns nearby, and the project is ideally located for access to power, water, employment, and the ports. I'll just very quickly talk about the kaolin market. It's a $4.2 billion market growing to over $5 billion by 2030. And ceramics is growing faster than that. It's growing at around 5%. So the key thing about our business is that we're located next to Asia, which is the biggest market and the fastest growing. And our product in the ground is very suited to the ceramic applications because it's very pure and white. And that's the fastest growing market as well. So here's a picture of one of our mines. As you can see, we're continually increasing the amount of material that we're mining, and the amount of production that we're producing is growing quarter on quarter. The ramp up has been somewhat delayed from our internal projections. This is really due to two issues. One was plant reliability, the other one was hitting spec on the grade. Now the plant reliability is now great, but we had issues with our kiln, which is a gas-fired device that dries the clay. We also had some reliability issues with our power system. We've now got great plant availability, and we've got those issues sorted. The other issue that delayed our ramp up was around production of our various grades. We've got 4 main grades that we produce. 2 of those grades we have ramped up, and we're projecting to be at nameplate capacity for those 2 grades by the end of this financial year. One of the other grades was our fiberglass grade. This fiberglass grade is kind of like the base load for our business. It's about 40% of the sales. We didn't hit the target on that as quickly as we did with the other 2, but we have since completed that, and we're now producing that very well. And the very latest, the most premium product we have is what we call K999. It's the finest grade. And when I did this presentation, we hadn't actually yet produced that. But I can tell you that we've had a win in the last week, and we've actually started production in spec of that grade. So that's a great achievement. So we're now producing every grade at the plant. We've just received the biggest order in the company's history from our number 1 customer. He's also our 4th largest shareholder. It's a fiberglass company based in Taiwan. And we just got that on Tuesday, so that's hot off the press. And we're getting customer interest is increasing, and we're getting a lot of orders from European-based customers who've got operations in Asia Pacific. And this is really on the back of what's happening in Ukraine. There's been a real tightness of supply in kaolin because a lot of clay comes out of the Ukraine. And we've had a lot of inbound inquiry, and we're right in the middle of converting those inquiries into ongoing business. And I did mention that 20 kg bag market that's coming up. That product sells between $500 and $600 a tonne versus around, as I mentioned, $300 a tonne. So I'd just like to conclude by saying that we've successfully delivered on stage 1. We did it on budget. We were a little bit late. We're about 3 months behind our projection in terms of building the plant, but we did it on budget. And I think that's a great achievement in the environment that we did it. As I mentioned, we've got premium pricing for our products compared to our projections. We've got a very big mine with high quality materials. That's a picture of the mine there. That's not doctored up. That's actually what it looks like. It's very white, and some of the people in the audience who've been there will attest to that. We have a pilot plant in Kwinana, as I mentioned. We're now retooling that to start making high quality products for the paper market. So that's a new, and that'll give us access to much higher volumes than what we're doing out of the Kwinana plant. And we're an emerging global player who is in production.
Thanks very much, Andrew. One of the points I picked up from that presentation was that the company, when they put their definitive feasibility study out, had estimated they would bring in about $240 a tonne, but in reality it ended up being $270 a tonne. So for those cynical investors out there who love to drive a stake through the heart of public company DFSs, take note, they don't always get it wrong, and they don't always overestimate it. So 270 versus 240. Okay, so ladies and gentlemen, our next speaker is Pat Williams, the Managing Director of Revolver Resources. Pat has worked in the global resources business for more than 30 years, where he's held senior roles with several international mining operations from the front line through to the boardroom. Working through a range of senior production and management roles, Pat gained strong operational management experience over 15 years. As COO of global mining services company Runge Limited, Pat steered that business through IPO and various M&A transactions. Ladies and gentlemen, I give you Pat Williams from Revolver Resources.
Hello, I'm Pat. I'm from Queensland. I don't think I'm very smart. I don't know whether that's because I'm from Queensland, but in Revolver, because we're not very smart, we're trying to do simple things and keep life simple. In the work sense, we found this. We kind of looked at it and we went, okay, what's that? Because we're not smart. And our good geologist told us it's a stick of copper, probably some of the highest grade copper that anyone here in this event tonight's ever going to touch, so please come and say good day to it later on. Parts up and down the stick of core, shoot on an XRF over 45% copper, but it averages 20%. So high grade chalcocite enriched massive sulfide. We got this. This bit's about a year old, came out of the ground and we went, okay, we're not smart people, what do we do? So we get the thematic of copper. I'm not here to convince you about that today. We don't have a lot of time till the bells ring in my ear behind me. But Revolver's been in existence for 7 years, 5.5 of that as a private company. We've had these assets. We've been very close to them. We've de-risked them. We've put a lot of money into these as a private business. So we brought to market in September 2021 two very high-profile copper exploration projects. So we've always set out to define Revolver as a business with uniqueness and distinction. Okay, it's not just one trick. Okay, so we brought to market two projects with very high exploration potential upside. Since we've listed, we've added a third trick, the near-term production potential. So since we've listed, we've advanced the two projects, both in Queensland, both in the north. The first is the Diane project, once was in the late 70s, early 80s, and still is, has the credit of being Australia's highest grade copper mine ever. Sticks like this. It produced for a short amount of time. They high-graded the massive sulfide lens and left everything else. Okay, we've spent 12 months quantifying what's left. There's a lot more than we thought. Since we released the resource in December last year, it made a hell of a lot of good sense for us to wrap around that a production study. That'll be released to market probably in the next 7 days or thereabouts, and it's going to have a very compelling business case with it. Second project we have is in the Mount Isa block. It's in premium postcode territory, and that's established from work we've done prior to listing that we've got ourselves in an IOCG system, and we're zeroing in on what we do with that as we go forward now. So a little bit more detail about each of those projects just quickly. The Diane project, northwest of Cairns, in the Hodgkinson province, Australia's highest grade producing copper mine. VMS, volcanic hosted massive sulfide. Where there's one of those, there's more. They're not unicorns. We set about establishing where there are more. After developing the mineral resource estimate, it was quite clear to us that there was more left behind than was appreciated. There's the remaining massive sulfide lens, and wrapped around it is a very neat homogeneous grade 1% oxide core. Run the test work, very good recovery, very good metallurgy. We'll have the infrastructure for regional step-out opportunities. So we had the theory all along with the VMSs, where there's one, there's more. We've spent the last 12 months in the region identifying and focusing in on the trends that exist across the territory and identifying for us, proven by a drill hole that we completed just in January, stepping out a couple of kilometres from the old pit, we've intersected another VMS system. So very happy with that result. It legitimises all of the exploration work that we've done in the year, and we find ourselves with a district scale opportunity that stretches for quite some kilometres. Several high priority EM targets. When the rain stops up there, we're certainly going to spend the rest of this year on two fronts with Diane, the production development plan and the step-out drilling across these very exciting VMS upside potentials. Second of the projects, as I said, is out in the Mount Isa block, Project Osprey. It's got good neighbours, it's in the right postcode, it's elephant country, and we're clearly hunting for elephants, and we're very much on the scent for that. Here's our project, 800 square kilometres. This is the project that we've had since inception in 2015. Multiple phases of exploration work, lots of diamond drill core. We've reanalysed, reassayed, retested that, and clear evidence. We've got ourselves an IOCG lookalike system. Late last year, we ran a 1,000 line kilometre heli EM program. That's come together just now, giving us some very close correlation in this small little postage stamp area that we've started in. Very close correlation to the drilling nearby that we'd completed. This is where we started, up north of Mount Isa, and since we've been progressing with what we've done, we've had some pretty big neighbours come in close by over the last 12 months because they recognise the pedigree and the quality of the acreage that we've got. We don't sit around on our hands, not because we're not smart, we've got to keep doing the work over and over again, but we're very results-focused people. Since 2015, we've constantly worked the projects, constantly improved their value. So we're sitting here today, proudly saying Queensland's next emerging copper producer with exploration upside on two crackingly good projects. So we're excited about where the world is, and we're moving forward with quite some haste. Thank you very much.
Look, just from a personal perspective, my view is that copper has been left behind in the whole lithium battery metals juggernaut, and it's only a matter of time before it gets dragged along. It's very much part of that thematic, and I think companies like yours are really interesting, particularly when they've got grade, Pat. Okay, so ladies and gentlemen, it's my pleasure to introduce your third and final speaker tonight, the very appropriately named Andrew Rich. Andrew is the Managing Director of Linden Gold, and I might pause to say an interesting guy. He's built a private gold mine, which doesn't happen very often. I mean, most people in his position very early seek the comfort of an ASX listing and all of those sort of disengaged passive investors. Andrew's put together, I think Andrew was 150 shareholders, something like that, who have privately funded this gold mine that is now actually mining gold, albeit the company is seeking to list in a month or two. So watch that space very carefully. It's pretty rare you get a company seeking to list and they're already producing gold. Of course, we're all worried about companies blowing up their share structure with capital raise after capital raise, and so it's really cool to see a company coming to the ASX that already has an income. Okay, so with a 13-year background as a mining engineer and underground manager, Andrew's experience lies predominantly in gold and nickel projects, having successfully led the delivery of 3 underground mining projects through construction and into production, including Paddy's Flat, Shannon Underground and Linden's Second Fortune project. Ladies and gentlemen, please welcome to the podium Andrew Rich.
Special thanks to JP Equity for having me up here this evening. So we started life out in September of 2020 as Linden Gold. We were formed out of a couple of private contractors that wanted to buy their own gold mine and get it into production. And we identified an asset being Second Fortune, which is a couple of hours north of Kalgoorlie in the Linden goldfields. We're a junior gold producer, as Matt said. We're not necessarily emerging. We're coming up and making some good runs and inroads in before we decided to list. We're well on the way to trying to achieve that IPO, and as Matt said, looking to achieve that in the next couple of months. And the Second Fortune mine, we purchased it in September of 2020. We took it out of care and maintenance and quickly back into production within 7 months. It's now consistently producing underground narrow vein gold mine with almost 35,000 ounces produced since we started. The average grade is 3.7, but notably we've seen the average grade increase to 4 grams in the last 6 months and looking to increase that as we go along. We've got an excellent relationship with St Barbara. They're not only our processing partner, we process our ore up there at the WA Mill, which is about 140 kilometres from Second Fortune, but they're also our financier as well. And they're a big supporter of what we're trying to do out there at Second Fortune. And on IPO will become a major shareholder of us at 19.9%, and we're very happy to have them on the register. Second Fortune, it's an operating cash flow positive mine. It's given us a good base to grow from there in that South Linden goldfields. We're looking to build on that. Recently, we entered into a joint venture arrangement with Matza, who are our northerly neighbours above Second Fortune there. And that's a 50-50 joint venture for the mining of the Devon pit, which is only about 10 kilometres from Second Fortune itself. Matza released a scoping study onto the ASX in April of 2021, and that showed a very robust, high-grade open pit out at Devon there that's had 40 million in free cash flow. We're currently working on our own feasibility study, and that's due for delivery in August of this year. Our tenements sit back down at the Second Fortune area. They've had little to no modern exploration put to them. A lot of previous tenement owners have put the minimum expenditure only to these tenements, and that's something we really want to change, particularly with the IPO funding. We spent the last couple of years getting Second Fortune into production and consistent production, and now we're changing and looking to grow and expand from that base. Long term, we want to be a 100,000 ounce producer. We want to have our own mill and be producing from a number of different operations in and around that area. Second Fortune's doing about 22,000 ounces per month at the moment, per annum at the moment, and with Devon at about 30,000 ounces once we get that into production, we're well on the way to getting to a 100,000 ounce producer. We're situated in the Linden tectonic zone, which is a prolific gold environment. There's a number of tier 1 multi-million ounce deposits in and around Second Fortune. Sunrise Dam is just up the road, about 70 kilometres. There are nearly 12 million ounces. Granny Smith and the Wallaby mine a little bit further to the north. You can see we're located on that eastern section of the Linden tectonic zone there. And what's quite exciting for us is that one of those major structures that runs very close to Sunrise Dam and Red October also runs through the centre of our tenement package. So we're quite confident that there will be a sort of number of resources off that primary structure, and we're looking to exploit those with a bit of drilling from the IPO funding. Second Fortune tenements themselves, they're all joined together, which is fantastic. They're not too far away or spread apart. The Second Fortune mine's really quite shallow in comparison to a lot of other mines that are in the region. We're only about 270 metres in depth, and mines typically in the region are well over 1 kilometre. We're looking to get that Devon pit into production, which is only 10 kilometres to the north. With our DFS underway at the moment, we're aiming for a production in sort of early to mid-2024. In fact, we've got drillers turning up there today and arrived up at Devon to continue drilling out that resource. That's a two-pronged approach for us. One is to improve the confidence level of the current geological model, which underpins the feasibility study, but also we're aiming to try and increase the resource and hence the reserve of Devon by about 20% with this drilling. So those results will be available in the next sort of 3 or 4 weeks, and we're looking forward to those. St Barbara, as I said, they're processing our ore out there at the Gwalia mill. It's about 140 kilometres from Second Fortune. You can see us, we're on the black tenements down there to the south of that picture. St Barbara, big supporter of us. We are also assessing other milling opportunities in and around the area. There's a few bigger mills in the region. They're a little bit closer than what Leonora is, and we're working through those over the next course of this year. Second Fortune mine itself, this is a long section picture. You can see we've developed down about 270 metres in depth. The decline's sitting at about 300 metres at the moment. We haven't got a lot of holes below us in terms of depth. We're confident that the ore body continues. That's one thing that we've noticed about the ore body itself, is it's reasonably quite straight. It doesn't dip much, only about 5 degrees from vertical. And it's consistent. It's not moving around, it's not faulted. We think this thing will keep going for a number of hundreds of metres yet. With the IPO funding, we're planning to drill the bottom of that Second Fortune area out and really underpin a longer life mine out there at Second Fortune. Also of interest to us is the targets to the north and the south of Second Fortune. They're both open along strike. We have found some more ore to the south on the other side of what we call the southern fault there. We're currently mining that, but haven't found the end of it. So again, with the IPO funding, that's something we want to plug a few holes into and expecting to increase the size of the resource. Second Fortune for us, been producing since April of 2021, producing gold. Our realised gold price in the last 9 months was about $25.70 per ounce. And everyone's obviously seen today's gold prices. You guys can do the math, but we're well positioned to capitalise on that. Cross-section view of the Second Fortune mine. We're mining 2 veins in a 30-metre section of ground. There's actually 3 veins there. We're only mining 2 of those. Again, we don't have a lot of drilling to the west or the east of the mine, and that's something we want to change with the IPO funding. Second Fortune itself is really characterised by a number of parallel lodes very close together. We don't have the drilling outside to show what's there. We do know that there is another lode about 1 kilometre to the east, but what sits in between that zone remains unknown, and that's, like I was saying, something we want to change. One of the great benefits we've got out there at Second Fortune, the infrastructure's already in place. We've got the camp, we've got the workshop, the airstrips there. We're well set to capitalise on any resources that we do find in and around the area. Everyone's seen the high cost environment that we're currently in. We have a number of high-grade prospects in and around Second Fortune, all on granted mining tenements. And I guess we've set ourselves apart a little bit from other companies in that we don't have to wait. If we do find resources on these granted mining tenements, we don't have a long timeline to production. We've got the infrastructure there, we can utilise the base at Second Fortune and move forward. Second Fortune, it's a very shallow mine in comparison to other mines in the area that go well over 1 kilometre in depth. Again, with the drilling, we're expecting that Second Fortune will be around for a number of years yet. The Devon pits, we signed the JV in December of 2022 and we're quickly advancing our feasibility study. Drillers have turned up today and are drilling out the bottom of that resource. There's a couple of areas there highlighted in pink, which are high-grade chutes, and you can see the dotted outline of our scoping study level that we completed and looking to build on that with the feasibility. Matsa released their study on the ASX in 2021 using a gold price of $22.50, and that showed a $40 million free cash flow. Again, with today's gold prices, you guys can do the numbers, but it's a very healthy number. In and around Second Fortune, this is particularly significant. There's a number of high-grade prospects that we've put some drilling into in the last 2 years. All of these are high-grade, narrow vein, and look exceptional from very shallow depths. We're looking to capitalise on that. This is the airstrip load. I won't go into too much detail. We can catch up with a few people after this. It's less than 1 kilometre from Second Fortune. Very exciting. 2 kilometre long structure with almost no drilling in between it. So that's something we're looking to follow up on. Thank you.
Very much, Andrew, and I've got to say it's great to see an exploration company that's already backed by a gold mine. Plenty of exploration opportunities around that particular gold mine, and of course it's already washing its face. So Well done to you, Andrew, for putting that together. And folks, keep an eye out for the IPO in probably a couple of months' time.